If you invested in Dubai real estate between 2020 and 2023, congratulations, because you experienced the golden age of the UAE real estate market. Pretty much any property, even the lowest quality by Dubai standards, was growing. Post-COVID boom, Russia-Ukraine war, everything was helping investors. And the numbers looked too good to be true. But the party had to come to an end, and I'll explain exactly what is changing. First, it's quick flipping. It's dead. Before, it was a goldmine thanks to the developers' flexible payment plans. What you could do is buy an off-plan project, put down only a fraction of the property price, and resell in a couple of months with a premium. Let's say you bought 1 million dirham property, paid 30% over several months, and then sold the property for 1.3 million, meaning for 300,000 dirhams more. So you spent just 300,000 and earned 300,000 more. So you got a 100% return. Now it's not possible anymore. First, because the market changed, and second, because developers are setting barriers. To quickly flip the property, the market should be growing super fast, and the unit should be really unique, and when the number of off-plan launches increases, the share of unique properties goes down. And now you don't have to wait long for the next launch. Also, not every project sells out quickly, so more often than not, developers have the stock left. So why would anyone buy the unit from you when they can buy from the developer, probably even at the lower price? And even if you have an awesome property and people would love to buy it from you while it's under construction, developers have made it really hard. Every developer has their own rules, but generally, you can't resell the property until you pay it off a certain portion. Now some set the threshold at around 50% or even more, and that's not all. One thing is when you can't make money, and another when you can sell below the buying price, because again, developers have the power not to let you do so. To sell a property, you need an NOC, which is a no objection certificate. It's issued by the developer, and now there are cases when developers just don't issue them if you sell below the price you paid. It matters to them because all the transactional data in Dubai is transparent, and they don't want the market price for their properties to go down, because they want to launch the next phase at a 10% higher price. But quick flipping was always associated with a higher risk. But no matter what your attitude to risk is, you don't want to face oversupply. And I'm not talking about a bubble. There is no market level oversupply in Dubai. We have a separate video on that, and that got a lot of nice feedback, so you should check it out. It's a cool video. So my point is that oversupply in Dubai exists on a segment level. For example, in some areas. The most overused example is GVC. The area was a lucrative investment for the last few years. Not just high rental returns, but also decent value growth. But now the number of units under construction is so high that even agents in Dubai are publicly expressing concerns about future returns. Now there are around 45,000 ready units in GVC, and around 35,000 more are coming. All of them are planned to be delivered over the next 3 years. So, generally, a huge influx of supply is not good for investors. Growing competition has two negative consequences. Number one, selling and renting out takes longer, because now the users have more choices. Number two, even for good property owners, it will be harder to charge a higher price. Before, you owned a unique apartment. Now, your apartment is still decent, but there are 10,000 more units like yours. So in GBC and other areas in a similar situation, you're in trouble if you have an average apartment. If your property stands out now, you'll be okay, but don't expect that you'll outperform the market. And let me add a small dose of optimism into this sea of negativity. It's very likely that many buildings won't be completed on time. Right now in Dubai, out of all of planned projects, 65% are less than 20% complete, so I think the factual increase in the number of units will be more gradual than planned. Another thing that bothers many investors is that off-plan is more expensive than ready properties. And I see two opposing camps over this issue. Those agents who sell off-plan say that this is how it should be, because new buildings will be better than old buildings, so all the renters and buyers will prefer to live there. Therefore, the price difference is justified. At the same time, those agents who sell ready properties say that it doesn't make any sense, because if you buy an off-plan project, you take more risks. You don't know how long the construction will take or what the quality of the building will be. Also, you don't make any money on rent. So, who is right? I think both of them, but I also think it's irrelevant. First, because ready and off-plan properties are two completely different markets. The secondary market is dominated by mortgage home buyers. They're residents. Off-plan is dominated mostly by foreign investors who can't get a mortgage, and in many cases will never live in this property. As a result, drivers that define the prices are not all the same. You won't believe it, but there is a significant correlation between the stock market and off-plan in Dubai. Second, the opinion that now, suddenly, off-plan became more expensive than ready real estate is wrong. I'll ask my team to show you the chart with the price per square foot comparison. Both Dubai market averages and specific areas show the same trend. Off-plan has been and is more expensive than secondary for many years, and the relative price difference stays pretty much the same. There are exceptions though. In some areas, off-plan and ready prices are really close, and these are master communities. Both new and old buildings are pretty similar in terms of quality, so developers' strategy to increase prices with every new launch results in ready units keeping up with the rising trend. Third, and that's the most important point I want to make today, if you're looking to invest in real estate to achieve high capital growth and outperform the market, then a general market level of plan versus ready price comparison makes no difference to you. The best way to achieve higher value growth is to invest in value gap properties. And in my opinion, this is exactly what investors should do now and what they always should have done. There are off-plan projects that are priced significantly lower compared to ready alternatives. Most often they're in new early-stage areas, but we've seen the same in developed communities, where projects were obviously better than other developments nearby, but were priced lower. And it's not about the budget. Such opportunities exist if you invest $250,000 or if you invest $100 million. I'm so confident about that because that's why we as a firm exist. That's our core expertise, and that's the value we bring to our clients. Hope you enjoyed the video. See you in the next one.